please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, as promised, let's take you through some opinion. Warburg Pincus, the single largest shareholder in Capital First, spoke exclusively to CNBC TV18 for the first time post the IDFC Bank merger announcement. The India head of Warburg told Nisha that they have no plans to exit the merged bank. Listen in.
Capital First is one we're quite proud of. We acquired control of it from the Future Group behind Vaidyanathan, really transformed the NBFC from a wholesale-oriented book to a very consumer SME lending one, built a really robust franchise. And in some ways, the opportunity now combined with IDFC Bank is the chance to take that to the next level, chance to create a bigger platform, to essentially combine the strengths of both of the institutions and create something larger. And I'd say, you know, from an economy-wide point of view, the India has need for more bigger financial institutions that can underpin its continuing economic growth. So it's a story we like, and in some ways this merger is our reinvestment in that story. And so we're quite excited about it.
So for that to happen and to have a more supporting role in terms of really taking Capital First IDFC Bank merger to another level altogether, Vishal, do you think that a board seat is something with 10% stake that Warburg Pincus will end up holding in the merged entity? Is that something that you're really looking at?
I don't think that the transaction is not contingent on Warburg having a board seat or anything. I would actually look at it, if I just step back, a couple of questions you asked. I think really you have two complementary businesses, and you had Vaidya and Rajiv on your channel and your show, and you grilled them already, so I don't want to repeat what they said. But to be honest, as Chip said, the opportunity to build something special, I think, is fantastic. As we look at it, we want to be supportive shareholders, supportive investors, and for us, it's really a reinvestment decision. We talked about the swap ratio, so I'd just give you an interesting story. I've spoken to a lot of shareholders on both sides. And there's a bunch of them that feel Capital First didn't get a good end of it, and there's a bunch of it that felt IDFC Bank didn't. So what that probably means is it's a fair deal.
Are you happy as an investor with the valuation? That's all I wanted to ask.
So to be completely honest, I actually think the swap ratio is not relevant. What we think is relevant is the opportunity to put these two complementary businesses together and create something that is multiples of where it is today. So, I mean, if you ask me as an investor, I'm thrilled with Capital First as it was. Vaidyanathan's done a great job. This is not, I just want to point out, it's not an exit for us. To Chip's point, it's a reinvestment. So for us to stay in this and own 10%, we have to be prepared to say, we're in here and we think the next many year story is exciting for us to make multiples from where it is today.
So no exit on the horizon, even in a couple of years, is what I wanted to check.
Couple of years is, I mean, it's impossible to answer now, Nisha, but that is not the mindset we have. Going in, the mindset is not a couple of years mindset. It's a mindset of it will take time to build this institution. And as long as the opportunity is there and the value creation is there, we'll be there with it.
And just one more regulatory aspect, to be at 10% and above, you need RBI's approval. Do you have that already? No,
we'll apply to RBI for permission to go from 5 to 10%. As you know, in the past, RBI has been open to providing that to fit and proper investors, but we'll go by the directions of RBI.